Welcome to Japan Market Brief, the daily English audio update on what moved Japan's markets and what matters next. April 13th was a reminder that Tokyo's rebound remains fragile. Japan's Nikkei 225 fell 0.74% to 56,502.77. The main reason was that the latest round of U.S. Iran talks ended without an agreement, bringing oil and supply concerns back into focus. That may sound like a familiar headline, but the tone changed in an important way. The market was no longer reacting only to broad fear. It was also starting to price where those risks could show up next inside Japanese companies. The external backdrop was not disastrous. The S&P 500 was almost unchanged, and U.S. yields were broadly steady. But Tokyo still slipped because Japan remains more directly exposed to imported energy and shipping concerns when the Middle East becomes unstable. Dollar yen rose to around 159.5. That matters because a weak yen makes imported cost problems more persistent. Even if it can help some exporters, it is much less comfortable for companies that rely on petroleum-derived materials or other imported inputs. So today's decline was not about a collapse in global sentiment. It was more about renewed awareness that Japan is still vulnerable when oil and the yen move in the wrong direction together. There was no single fresh Bank of Japan event that changed the session. Instead, the currency itself was the more important policy-related signal. If the yen stays weak while oil stays elevated, cost pressure becomes harder to ignore in the domestic economy. That is why today's move felt heavier than the headline decline alone might suggest. The issue was not only the index level. It was the type of pressure sitting underneath. That underlying pressure became much clearer in today's stock to watch, TOTO. NHK reported that the company halted new orders for system bathrooms and related products because procurement of petroleum-derived materials had become unstable due to the Iran situation. This is a useful stock to focus on because it turns a macro risk into an operational one. Markets often talk about crude prices, naphtha, shipping lanes, and the Strait of Hormuz in abstract terms. But once a company starts adjusting orders because inputs are unstable, the story becomes much more real. External coverage also said the problem involved naphtha-linked materials such as organic solvents and adhesive-related inputs. That makes TOTO relevant beyond one company. It shows how quickly energy and petrochemical stress can spill into Japanese manufacturing, housing equipment, and domestic demand businesses. This is why TOTO matters more than a simple one-day stock move. It offers a read on whether the current environment will stay limited to higher costs or start producing more visible disruptions in order flow, lead times, and pricing. In that sense, TOTO is a useful market signal today. It sits right where macro anxiety meets business execution. For the next session, three things matter most. First, whether oil remains elevated after the failed talks. Second, whether dollar-yen pushes further into a weaker range. Third, whether more Japanese companies begin warning about procurement, delivery conditions, or price adjustments. If those warnings spread, the market narrative will shift quickly from relief rebound to renewed supply chain stress. And if that happens, domestic names tied to materials, construction, housing, and consumer spending could feel more pressure than the index alone suggests. That is all for today's Japan Market Brief. Thanks for listening.